Hello, everyone. I'm Karston Donoven. I think most of you guys know who I am, but I don't get to come up here and talk about anything fun like sulfur, or carbon, or uronic acid, or whatever else they're talking about that goes over my head that you guys probably understand a lot better. But it's actually a pretty fun time in the crop insurance world to come present and talk to people about the changes because there's a lot of really important changes that are very beneficial for farmers and ranchers, some new programs that are out, and also as I'm sure you guys have been hearing a lot about, but there was a lot of changes from the One Big Beautiful Bill that were very advantageous for farmers and bringing that extra subsidies, extra programs. Essentially, it's just going to be a lot less expensive on the crop insurance side than it probably has been in years past for better coverage. So we'll touch on that. Again, I'm Karston Donoven. I've been in crop insurance, been in insurance for just over 6 years, always focused more so on the crop insurance side. Honestly, the days, we are a full service agency. This is our ag team. But honestly, the days that are filled with me having to deal with maybe some personal lines things or things that aren't crop insurance, quite honestly, those are the days I don't enjoy as much. I am very passionate about crop insurance. That's where I kind of found my groove a little bit. So hopefully it brings you some value. This is everybody that we have on our ag team. And then we also, again, are a full service agency. So these are the individuals that are more so on the personal lines, commercial lines, health and life insurance. If you ever do reach out to us, we do have our main office is here in Havre. I work out of the Red Yard office. And then here shortly, I think it was supposed to be done in October, but as with any construction, who knows when it's done. But at some point, we should be having an office in Chester. So we are continuing to expand and hopefully we'll continue to move along the road as we go. We do represent the top 3 crop insurance carriers. Just to show their, I guess, interest in us and an interest in you guys, we actually have a couple representatives from RCIS that drove up from Wyoming in the back there, Pam and Shane. So if you guys happen to want to talk to somebody, very knowledgeable people over lunch, by all means talk to them. We also represent NAU and Rain and Hill. Those are the top 3 companies in the industry. And then just real quickly on the farm and ranch side, we are an independent agency, so we represent multiple different companies, and where that's advantageous is we can quote you out with all 6 of these different carriers and see which one gives you the best premium, best coverage. Just to give you an idea, I had a couple recent renewals that I requoted out with one carrier. They were, for instance, one of them was a $40,000 renewal, was their premium on their farm and ranch insurance, requoted with another company, and they quoted them at about $20,000. So there are sometimes some savings to be had if you remarket. Sometimes maybe it makes sense to stay with who you're at, but by all means, it can be worth your time to at least see what else is out there. So again, the big changes came from the Big Beautiful Bill that brought 65.6 billion in ag focused spending over the next decade, and just short of 6 billion of that went to crop insurance. And where the majority of those changes are coming from are the BFR benefits, SCO, ECO, and then also the unit structures getting some increased subsidy, and then also changes to the FSA programs, which obviously I'm not an FSA representative, but crop insurance and FSA programs do tie in very well together. So the big change for the BFR benefits is it went from 5 years to 10 years, and then you're also getting more subsidy points those first 5 years than you were in prior years. So if you are a first-year farmer, sign up for the BFR, you're going to get 15 points of extra subsidy. I think where people get confused on that is it's not just like a 15% off coupon on crop insurance. What it means is, for instance, on some programs where it's already has an 80% subsidy amount, if you stack 15% on that, well, you're paying 25% of the premium as opposed to the person that only had the 80% because you stacked on an extra 15%. So it's very significant savings. And where I like to always mention this is where it can come into play for some people that maybe aren't BFR or maybe are passing it down to the next generation is obviously do whatever makes sense for you and your operation. But if you have, for instance, a son taking over some land or whatever it may be, if you just bring him into the entity and say maybe he's 50% owner, you're 50% owner, and you've been farming for 30 years, he won't be eligible because the people that make up the entity are you and him, and you don't qualify. So everybody in the entity or for each individual policy has to qualify for BFR in order to get those benefits. So what in the crop insurance side of things anyways, what might make sense is for him to create an entity of his own or farm under his name or whatever it may be, where you're not on that policy, so you don't kick him out of benefits. Because if he is and he's not receiving those benefits, you're also taking away years of eligibility for, let's say, when you do retire, you're not a part of it anymore. Now he's not eligible at all. So just thinking about those things of when you're transferring ownership, or the next generation is taking over, how you want to do that in terms of crop insurance. I think the most talked about change is the subsidy increases to SCO, ECO. Everybody probably doesn't even really know what MCO is, but honestly, probably stay away from that for now. It's the details of it are kind of getting worked out. Pam and Shane are laughing back there because I think they would agree with that. I'd probably stay away from it from now. But in terms of ECO, SCO, I think anybody that's listened about crop insurance talks, that's pretty much been the hot topic for the past 5 years. So I'm not going to spend a whole lot of time talking about what those are and how those work. But the biggest change is it's increased the subsidy for both of them from 65% to 80%. So that's significantly less premium. And I already touched on, like, if you are a first-year BFR receiving those 15 points of extra subsidy, all that added together, you're only paying 5% of the premium. The government's paying 95%. So if you are a first-year BFR, I would highly recommend those products. And even if you're not, I'd still highly recommend them. And reason being is the ECO subsidy, for instance, 2 years ago was 44%. So just in 2 years, last year it went from 44% to 65%, then it went from 65% to 80%. So if you're somebody that maybe 2, 3, 4 years ago, when ECO, SEO was really picking up some traction, and you quoted it out with your crop insurance agent, you said, too expensive, it's not for me. I'd highly recommend take another look, because it's significantly less. Maybe in those years it might have cost you for ECO $8 an acre. Now it's probably more like $2, $3 an acre. And obviously that varies per county, crop, all that kind of stuff, but much, much less. So if you're somebody that's like, you haven't done it in the past and you kind of forgot about it, I would quote it out before the March sales closing period, or the spring sales closing period, which is March 15th. Another part of that is the part of the changes is you can be in ARC and SEO at the same time now. It used to be where if you were in one, you couldn't be in the other. Now that has no effect. You can be in both. This just shows that over the past 4 years that it's showing, so 24, 23, 22, 21, in the entire state of Montana, the loss ratio for ECO is well over 100% every year. And essentially what that just means is anytime it's over 100%, the farmer's receiving more payment than he paid in premium. And honestly, I don't think this is a very good, accurate depiction of this general area. This general area, I mean, probably shouldn't say this, but in my opinion, SEO, ECO has almost been like a printing press for money a little bit. The loss ratios have been insane. They've been like 5, 6, 700%, which means every dollar you paid in premium, probably getting about $6 back in a 10-year historical average. Now, that doesn't mean you're going to get that every single year, but on those tough years, those bad drought years, obviously 21, 22, those years where the drought hit really hard, that's where you see those really substantial payments. And then years where it's good, and you aren't impacted by weather and the county does really well, you don't need necessarily an insurance product to step in because you did really well, right? So you have the income coming in elsewhere. The subsidy also came on the unit structure side. So optional units saw a little bit bigger increase in terms of the subsidy amount. From 75% and below, they received a 5% extra subsidy amount. And then for enterprise units, it gets capped at 80%. So some of them were already at 80%, but 75%, 80%, and 85% coverage levels received a 3% increase in subsidy. So all in all, what that just means is because optional units saw a little bit greater increase, it may be a good time for you to reevaluate if you're in enterprise, is it still a good idea for me to do that? Or maybe should now I be an optional? Because I think in the past years, people maybe decided to do enterprise, and then because of the fact that they wanted to do SEO and ECO, but those products were quite expensive, so they offset that a little bit by doing enterprise. But now with all the subsidy increases coming on the SCO, ECO unit structure, it may be a good time for you to do, I mean, by all means, enterprise might still make sense for some people or some crops or whatever it may be, but maybe optional makes sense again, because you can still get really good coverage down to, you know, that specific section and pay probably less than what you paid in the prior years on a per acre basis. So just take the time to quote it out and see what makes sense for you that year. This just shows that, this graph essentially just shows that as time progresses, the higher coverage levels are becoming more and more popular. So 70 to 75% is the most popular coverage level, but as you can see, the upper brown color, the 80 to 85 is eating into that more and more. So more people are moving to higher coverage levels. You know, buying up on that can be very advantageous for you. I mean, Gary Heilig, it gets very spendy, and usually farmers get knocked off by a little bit, but he stands by the fact that 85% optional coverage actually gives you a mathematical benefit over the carriers. Basically, as time goes on, you should mathematically receive more than what you pay in. So it's a spendy coverage, but that just goes to show again that people are moving to higher coverage levels. I won't touch on this too much because again, I'm not an RMA representative, but the big changes for the RMA side of things from the bill is that it increased reference prices. For instance, wheat went from $5.50 to $6.35. You can voluntarily update your base acres to more accurately, you know, show what you have. It extends, so for 2025, ARC and PLC, you'll receive the higher of, whichever one is higher, you will get that. For 26, you have to make that choice again. But I don't know, I have a video of it in interviewing Gary Heilig, who he's way smarter than I am, and by all means, you should listen to it. But you actually have an extended amount of time to make that decision for 26, possibly up until like after you even harvest this year to make the ARC and PLC decision, which can be very helpful for you. Honestly, Pam and Shane would probably be a lot more knowledgeable on that than I would. It also increased the ARC guarantee to 90% and the payment band to 12%, essentially just meaning that more likely to pay, and if it does pay a little greater amount. So that's all good. Our farmers can enroll in SCO and ARC, increase the payment limits to 155,000 with an index to inflation. That was a really big thing, is the inflation aspect of it. And then expands the AGI test to allow growers with 75% or more to of their income from farmer and ranching. Anyways, increases that. I guess outside of the changes from the beautiful bill, I'm sure you guys have heard a lot about that. I always just like to kind of give some hopefully helpful tips and reminders before the spring season, before you get out and, you know, get out in the drill and you're busy, it's your go time. We always get a lot of questions regarding enterprise units, so I just want to go over what qualifies for an enterprise unit and how can you structure the coverage for you. Winter option, I think that'll be coming into play some this year. What spring crop prices are tracking at, and just some of the top asked questions that we get. So biggest thing to remember on enterprise units is the 20/20 rule. The easiest way to think about it and what comes into play 99% of the time is essentially, in order to qualify for an enterprise unit, you have to have at least 2 sections of that crop and at least 20 acres in each section. So where the other part that comes into play sometimes is if you have under, let's say, 100 acres of a crop, it can be 20% of that crop. But for most everybody, it's 20 acres in 2 different sections. And the other part of that, to stack onto that people get very confused on, is if you do enterprise by type, EO, EI, all these different options, each type has to qualify on its own. So the easiest way to think about it is you have to have 2 different sections of winter wheat with 20 acres apiece and 2 different sections of spring wheat with 20 acres apiece for those 2 to be separate, if that makes sense. So that sometimes comes into play for people where they're like, oh, I didn't know, I only seeded 1 section of spring wheat. So now the option, if that happens, please make sure you get your acres in timely before the deadline of acreage reporting to your agent, because that just opens up the option that if that is the case, you can still separate them. It's just that in that scenario, the spring wheat would have to be an optional unit as opposed to an enterprise unit. So a little more premium, but then you can separate them, or you can have the option to just have it all be one enterprise unit where winter wheat and spring wheat are together. So it gives you options, whereas if you don't do that in time, you're just automatically in enterprise units altogether, which you might not want to do because then your spring wheat and winter wheat are together. So again, ET is going to be the most popular option. I'd say if anybody has enterprise units, they probably have ET on there. You might not even know what that means, but if you are an enterprise unit and most people around here, conventional farmer, make sure you have that ET designation on there. That's very important. If you're somebody that is partially organic, partially non-organic, EO might be helpful for you. That just means that you can separate out the organic and non-organic. And then EI is a good thing for people that may be some irrigated, some non-irrigated. It's just a way to split it out so that you're covered better. This is a very hard to follow, essentially, flow chart of what happens if you have the winter option. So biggest thing to know is if you do have winter kill, you essentially have 3 different options. You can continue to take it to harvest, continue to care for the crop, and just leave that harvest claim open and determine the loss at harvest time. You can replant and just follow those standard replant procedures, or what the winter option allows you to do is you can destroy the crop, and then you can have choices after that. And the choices are, you can choose to insure the second crop. So let's just say everything's winter kill, total mess. You decide that you're going to destroy that crop and you're going to plant a second crop. You have the choice to insure that second crop, and you pay 35% of the premium on the first crop, and 100% of the premium on the second crop, and you receive only 35% indemnity on the first crop. And then depending on, I'm trying not to take up too much time, but depending on whether you have a loss or on the second crop or don't have a loss, you can see what happens there. If you choose to not insure the second crop, so you just decide to pay 100% of the premium on, for instance, your winter wheat, and then you say, well, it makes sense for me, I want to put lentils out there. You can just pay 100% of the premium on that winter wheat, receive 100% of that indemnity, and then you can just plant lentils or whatever it may be and just not insure it. Then you'll receive 100% of the indemnity on that winter wheat. Some people like to do that. Or if you choose to leave the ground fallow, so you just decide to kill it, it's going to be next year's problem. You'll pay 100% of the premium and just receive 100% of the indemnity. And as long as it's essentially killed by June 15th, then you can consider it fallow for the following year. So essentially just having that winter option, which it doesn't cost you very much. I don't think we have a single policy that doesn't have winter option. So if you have winter wheat, make sure you have that option on there. It just allows you the options to choose what makes sense for you that year. If you don't have it, then your only option really is to take it to harvest or replant it and get a replant payment, which some years that might make sense, but some years it might not. So having that winter option is extremely helpful. This was as of yesterday when I was putting the slide together. This is what, we don't know what the prices are for sure. The prices are tracked from beginning of February till the end of February, and then they're released early March. So this is just what they are tracking at currently, and then what the prices were last year. So spring wheat is tracking at $6.13, so down a little bit from the $6.55 it was last year. Organic spring wheat, $11.88, down a little bit as well. Durum is at $6.91, barley $4.17. Canola is actually up a little bit, tracking up a little bit from what it was last year at 0.226, and then flax is actually up a little bit, 13.4. So all in all, I think you guys probably look at that and you're like, what? I'm not getting that from my spring wheat, or that's not really the accurate. But all in all, at least it's pretty similar to last year. You also might be asking, why are there no dry pea prices on there? Dry peas are tracked in a different way, and we actually aren't able to see what they're actively tracking at until it's released. So I don't have any information on like lentils, chickpeas, all that kind of stuff. They generally follow suit with what pretty closely with what the harvest price was released in middle of January. So that's what we're kind of looking at. Some of the top questions that we get, at least probably the number one question we always get as well, is SEO, ECO going to pay? How much money should I be expecting here in the middle of April? I don't really know, but I guess all in all, and it really depends on what the crop is, your county, all that kind of stuff, and what the yields were for that year. But because of the amount of price decreases we saw in 2025, I think we'll see at least some payments for quite a few of the counties, at least starting to get into ECO, maybe some SCO. So I think you'll see some payments if you did have those programs last year. Hill County, for instance, the year before, we saw a similar decrease in prices, but because of the fact that the county yields outproduced the expected county yields by so much, it didn't. But then Liberty and Blaine County that year also, because they cut under, they actually saw some pretty significant ones. So it's really a county by county, crop by crop thing. But I think as an overall, we'll see some payments start to come in the middle of April. Another question is, can you make changes to your spring wheat coverage before the spring sales closing deadline? It's kind of a loaded question in a sense of, if you didn't seed winter wheat, you can make changes. If you did seed winter wheat, then wheat is wheat. You can't make any changes. So if you don't have any winter wheat, you still can make some changes. If you did, then you're kind of locked in on the spring wheat side. But you can make changes to other spring crops such as dry peas, barley, all that kind of stuff. Another question that ties into, I haven't really received this much, but I think we will, is in terms of tying into that winter option slides, is what happens to my winter wheat if it fails and I'm in enterprise units? Well, because you're in enterprise units, let's say 50% of your winter wheat is winter killed. Because you're an enterprise unit, they have to have that full unit information before they pay you. So what that just means is, let's say half of the winter wheat crop is failed and you decide you're going to do it, whatever, one of those options, you have to wait till harvest before you get that payment. Whereas if you're in optional units, and let's say that whole section is deemed to be killed and you're going to destroy that entire section, because you're in optional units, you can receive that payment for that unit because that one's done and over with. So if you're in optional units, you can get that money a little faster. If you're in enterprise units, you got to wait till all of that crop is harvested and they have all of your yield information. So that's one aspect where optional comes in pretty handy, whereas enterprise you got to be a little more patient on. Another question, more so just tip for you, is if you are an organic grower, make sure you have the contract price option on your policy. It's a little CP is what it'll show. That just allows you to use your contract price on your crop insurance as opposed to the price that they give you. For instance, we looked at the organic spring wheat price that they were tracking at. Let's say you have a contract at $15. Well, if you can provide that to your crop insurance agent in time, you can use that $15 as opposed to the $11.88 or whatever it was that it was tracking at. So it can be very helpful, but that's only for organic growers, not your conventional guys. And then again, the other question that we always get is, how much is SCO, ECO going to cost? Can't get down to the fine detail of what it'll be because we don't know those final prices and the volatility factors, but because we can see what they're tracking at, we can get you pretty accurate numbers. So if you are curious, feel free to reach out to myself or your crop insurance agent. And then just a last few little tips, some other changes that can be helpful for people is quality loss. For anybody that knows what that is, it is available for dry peas now. You could have had it, for instance, on your wheat. And what that just does is it allows you to potentially raise your APH by taking away years that had, or not taking away, but taking away the impact of quality loss on those years that had quality loss. So that can be helpful for you to add to your dry peas. It wasn't available in years past. So if you want to add that, you have to do so before the March 15th sales closing deadline. YP, yield protection and revenue protection, is now available for flax. If you're a farmer that is a brand new farmer, first year, or you're farming in a new county, make sure you sign a intended acreage report. That just allows you to prevent plant coverage. I don't know if we'll really run into that much this year, as dry as it is, but I guess all in all, you never know, so it's better to have that coverage in place if you need it. And then the new breaking rules, they are significantly less. I won't go into too much details on that, other than the fact that under the terms of the new policy, there is no option to not insure new breaking. And then all in all, what I told, everything I kind of touched on was good news. It's all great news for farmers. The only bad news, I guess, that we have, at least in some of the areas of the state, is this time last year, the drought monitor is on the right, whereas this year it's on the left. For quite a bit of the state, it's actually better, whereas the High Line, Choteau County, kind of the Golden Triangle area where probably most of you are from, it's looking a little bit worse. So that's where some of these products such as SCO, ECO, it might be a good way for you to mitigate some risk. Last thing I'll touch on is I kind of talked about my talk with Gary. I do weekly, well, I try to do it weekly, but anyways, videos that can be found on our Facebook, Instagram, or our YouTube channel that just kind of essentially tries to cover topics on maybe more of a 10 to 15 minute video that's easier to digest. So please follow along on that if it interests you. Does anybody have any questions? Sorry, I probably went a little bit longer than I kind of intended, but does anybody have any questions? All right. I think we're pretty hungry, so. All right, I think she's actually got the food already out, so go ahead and you guys can just start lining up. Go get some food. It's good stuff. I love some Marie prime rib.